Hi guys, welcome to my channel. My name is Yubraj. Today in this video, I'm going to analyze and predict Nasdaq 100 future in 2025. What will happen in 2025, whether it will be bullish market or bearish market. In order to analyze and predict the market, basically we need to focus on two major things: political and economical. In this video, I'm going to focus on the economic situation, the indicator of economic situation that will be the current data. So I'll try to find the trend of the current data, means 2024, what type of data we have got. And then those data I'll try to compare with normal data. I'll take 2019 data. That time economy was very normal, so I'll compare these data with 2019 data, and I'll try to find what will happen if in 2025 if we get data similar to 2024. If we get worse data in 2025, or if we get improved data in 2025, what will happen in these three different situations? And then when the data release, then you can predict whether market will be bullish or market will be bearish. Okay, so based on this data, I'll try to predict stock market, whether in 2025 it will be bullish or it will be bearish. There are lots of data, but some of the data, they are very important. They guide the economy, future economy. For example, CPI. It is change in price of goods and services, except food and energy. If we have got a higher CPI, then it indicates that inflation rate is higher. If there is high inflation, the price of every goods and service that will be increased, and then people, they can't afford that product and service. Everything that will be uncontrollable. That's the reason government will make tight monetary policy. When it makes a tight economic policy, it directly affects organization, companies. The economic situation will be uncertain, so those businesses which are already in the market will struggle to sustain, and new organization, new investors, they will not enter in the market. That means the organization's value that will not increase, means the stock market that will fail, that will decrease, the stock market that will be in bullish, the stock market that will be in bearish mode. So now let's see in 2024 CPI. Let's see the CPI in 2024. This is the monthly CPI. Here you can see from February 2024 to December 2024 data. You can see here for 3 months February, March and April 0.4, and it decreased 0.3, 0.2, 0.1. Very good progress over here. And the 0.2 is still that's fine, 0.3 is still that's fine. But the thing is that here, when it's 0.3, instead of decreasing, it remains constant. It shows alarm, some bad symptom. This is because constantly for 4 months 0.3. Now here the investors, they might be in doubt whether the inflation gonna be revived in 2025, because it is a constant 0.3. 1 month or 2 months, that's fine, but constant, that means it is not good. Inflation, the price is increasing constantly, remaining 0.3 constantly. Now let's see, in 2019, what type of data, what type of CPI data, monthly CPI data at that time. We can compare whether these data are normal data or not. Let's see that. Okay, so in 2019, you can see here the data. 0.3 here only 3 months, except that 0.1, 0.2, mostly 0.1. This is the normal type of data. When constantly 0.3, then there is a chance to increase it. If it increases, still 0.3 is high, and then if it remains constant or if it increases, then it indicates inflation is going to revive in 2025. That's the reason January 15th data, that would be significant. On 15th January, we'll have CPI monthly data. We can see whether there will be some improvement or same data or worse data. Worse or same data, that will not support Nasdaq 100 future or any stock market. Now let's see CPI yearly data also. So yearly data, here you can see February 2014, February 2024 to December 2024. This data, check this data. February, March and April 3.1, 3.2, 3.5, it was increasing. After that, it started to decrease 3.4, 3.3, 3.0, 2.9, 2.5, 2.4, continuously decreasing. Good hope. And Fed also was very much hopeful that it is in control. Inflation is under control, and then they are expecting very soon it will be under 2.0. But check here, November started to increase. Yes, and December also it increased. So this is not good symptom. It should be below 2.0, but in order to make that number 2.0, that rate need to work more. That's the reason Previously, Fed it was saying that in 2025 there will be 4 times interest rate decrease. But when they analyzed these data, when it started to increase, then they have mentioned that not 4 times, potentially twice in 2025. That's the reason suspect or doubt in the mind of investors. Uncertainty in 2025. Let's compare this data with 2019 data. What type of data we had in 2019? Let's see those data. Okay guys, so here you can see 2019 February to 2019 December data. Only in December 2019 it is above 2%. It's a 2.1. And we had in May only 2.0. Except that all the data below 2%. And then this is the target. This is the target of Fed. But instead of getting below 2.0, at the moment, October, November, December, the data that is increasing currently. It means whether the inflation gonna be revived, monetary policy gonna be still tight, or the interest rate will take longer to decrease. Uncertainty is over there. Alright, so now let's see PPI, Producer Price Index. It measures price of goods sold by the manufacturers. Previously, we checked CPI, Price Indexed, based on the consumer, and here we are going to see Price Index based on the manufacturers or the company or the organization's point of view. From February 2024 to December 2024, we can see the data here. 0.4, 0.2, 0.0, 0.2, this type of data we can see over here. Whether this type of data, normal data or not. Let's see, let's compare it with 2019 data, and then we can predict that what will happen in 2025. Okay, so these are the data in 2019. Here only one time we have got 0.4, one time 0.6. Except that other data we find 0.1 or 0.2 and sometimes minus as well. Okay, so but the data in 2024, it is higher than this type of data, but not that much. That means from the point of view of manufacturers, it is not that much far. It is not that much far, so we are okay. We are in good position. This is the Producer Price Index monthly. Now let's check yearly also. It has increased in December 3.4. Instead of decreasing, yearly PPI increasing. It is not a good sign. It increased from 2 in February, it was in 2, but now you can see 4. Is it normal? It is not normal. Let's see 2019 data. Okay guys, this is a PPI, yearly PPI 2019. You see here, it is around 2, 2.6, 2.5, 2.4, 2.4, 2.3, 2.1, 2.3, 2.2, 2.0, 1.6 and 1.3. But at the moment, 2024, end of 24, we are in 3.1, 3.4, like that. It is increasing. It is not a closer to 2019. That means inflation rate is still high, yearly based from the point of view of manufacturers also. Another important data, that is unemployment rate. So at the moment, unemployment rate is a 4.2. It is above 4 constantly since June 2024. It is above 4. It also another alarming situation. Let's say in 2019 whether we had a similar type of unemployment rate or less. Let's say that. Yeah, if we take 2019 inflation rate, if we say 2019, the unemployment rate that was below 4, but at the moment it is above 4. So in terms of unemployment rate also, we are not in good position at the moment. It indicates that so many people, they are claiming the benefit. They are claiming the unemployment benefit. So now let's come to the interest rate. Interest rate, it is too high. You can see here 5.50, and then it decreased to 4.50 at the end of 2024. It is quite high. It should be around 2%, but it is 4.50. When it is 4.50, it directly affects companies, organizations. Investors, they can't take a loan and invest in the market. Let's see in 2019 what type of interest rate was there. Check here in 2019 interest rate, highest that was 2.50 and lowest 1.15. But at the moment we are in 4.50. It is nearly double than 2019. It directly affects investors. It directly affects employment market. It directly affects inflation. It impacts everywhere. At the moment we are in tight economic policy. Based on that, the market is a quite difficult situation, stock market especially. That's the reason, in order to increase the market, what should happen? The interest rate, that should be decreased. It should be decreased. It should come down. In order to calm it down, the inflation rate that should be decreased. It should go down, and the unemployment rate that also should be going down. CPI, PPI, payroll, unemployment data, these are the major things that determine the interest rate, the monetary policy. At the moment, all of these data are not that much good, are not that much impressive. If they are not impressive, then it is very hard to decrease the interest rate and jump investors in the business. Even the businesses which are already in the market, they will struggle to sustain their business, and then unemployment rate will be increased. Potential recession. So we need to see the data in January, February, March, what type of data will come over there. If a similar type of data that we got in October, November, or December, or worse data, market will be bearish. But if improved data in CPI, PPI, unemployment rate, and payroll, if improved data, then investors, their confidence will be increased. They will start jump in the market. Market will be in recovery phase, normal phase. Slowly it will be in normal phase. That's the reason we need to see what type of data we'll see in January, February. Based on that, we can see where we will go. If the data will not be improved, then from the top or 20K Nasdaq 100 future, from there will go down around 25 to 30% down. But if it is improved, then it will continuously be bullish and then go up, and then we can see 30K in 2025. This is the prediction. Let's see the data. And there will be another thing we should not forget: political situation. Based on political situation also, it will be affected. That political situation that I will cover in my next video. Thank you very much for watching this video. Please like it and subscribe it, so as soon as I create another video, you will be notified. Thank you.